Hello and welcome to Market News. How real is the probability, according to you, Masha, of some FII outflows taking place as well? We've seen a bit of it, in fact, a fair bit of it out of the debt markets, not so much in the equity markets at all. But from a very global perspective, from the way you would see money moving, how real is the probability that we could actually see some outflows out of India?
Well, Vivek, I think it depends on how credible the policy remains. If you see the policy pointing to a repair of the imbalances, outflows probably will not be very significant. If you see none of that, and you see again these bouts of mini cycles that we referenced before, that outflows, given the stock of investors still being very much in this market, you could see that accelerating. So I think the RBA governor have shown you how this could be done. And again, if this is coupled with some fiscal action, you will see probably less of a threat. But the environment in the context of gradual rate normalization is not particularly supportive for the inflows, should we say.
I want to take a bit of a point on that whole fiscal situation, Masha, because that's been an issue you've been raising for over a year. In fact, every time we've spoken, you've made it a point to highlight the whole fiscal austerity bit. Do you see on that front things having moved while you've complimented what the new governor is trying to do from the RBI's end? But what about from the government's end? Are you beginning to see some movement on that front as well? You had also last time told me about the need for more legislation to open up foreign capital, for example. We continue to see weakening growth. We've seen the IMF cutting the growth forecasts significantly for India. So from a macro point of view, from an economy point of view, how is India looking to you?
Look, it's a question of both business confidence that is derived from the ability of businesses to see what was legislated, then implemented in the reality. We've seen, obviously, tentative signs almost a year ago to open up a number of sectors. We're yet to see, I think, the full legislation package that we need to see the, the laws being put together. But I think the businesses are remaining very much on hold, worrying about this pre-election year. It's a curse, right? Because we know that it's very difficult to remain fiscally continent at the time when your political future is, is up for grabs or is uncertain. So market has expectation that the fiscal deficit will not be reined in the pre-election year, that there will be more giveaways, and that is made even more difficult, i.e. that type of fiscal balance, in the time when growth is lackluster. You have less tax receipts, and you have higher cost of borrowing. So it's a pretty tough going. We've seen clearly a year ago an important course charted by the finance minister towards more fiscal prudence. But again, he is in a tough position given this election dynamics and given lower growth.
Hello and welcome to Market News.